Hey traders, checking in on the stock market today. We had a bullish day out there, some daily bounces getting going, but after hours, a bearish reaction to some earnings. Still a very clear level we're watching on the NASDAQ, I'll highlight, and we'll go over a trade review for Snap. Last reminder, tomorrow, 4:30 p.m. Eastern, we're doing our private live stream where I'm going to give a tour of the Chart Guys membership and community and what it entails, answer any questions, give a discount code, and all that fun stuff. Click the link in the comments of this video to sign up, and I'll see you tomorrow. So we can see SPY has a bit of a bounce going. We topped out early in the week, we've held support, and now we've broken short-term resistance, so a little bit of a bounce underway. Could we call that a daily uptrend? That depends on you as an individual. You could definitely say, yeah, that's a higher low and higher high. That's a daily uptrend for me. You could also condense it to the 2-day time frame and say, considering the magnitude of the drop preceding this bounce, it's not really a trend change for me. Depends on you as an individual. For me, as I said in the video yesterday, QQQ matters more, and QQQ is not in a daily uptrend, so that's what matters to me. So SPY right now had a decent day, but after hours, NVDA with a bearish earnings reaction. So SPY is dropping a little bit with it. We dropped a couple dollars. We're bouncing a little bit now. So nothing significant. If we look at the S&P 500 futures chart, we had a 6-hour. I was watching the 6-hour tightening range into the morning today. Low, high, higher low, lower high overnight. Low of today was another higher low. And then we bull broke. So it's a bull break of a tightening range. And it's the NASDAQ that we care about. So I drew this yesterday for the potential of a falling wedge to be keeping an eye on. And you can see I didn't touch this. This is exactly where we stand right now, still right around that level. I always care more about price levels than trend lines as they are concrete and there is no subjectivity to them. And we know that we have our resistance zone that you can see from space that everybody is watching, where we topped out last time. And this was the zone. 4 rejections from here, and look at where we topped out today. We had the Fed minutes and a bullish reaction to those Fed minutes, but the high of the day rejected from this zone. So we can now call that a 5th rejection from this zone, and we can very confidently say bulls are not going anywhere unless this level breaks. So looking at the daily time frame, we can see we're not in an uptrend. Even if that level breaks, we're not in an uptrend, but we're battling that resistance level. After hours, we dropped a lot more significantly. On NVDA earnings, we closed at 291. We dropped 1%. Again, we're bouncing, but it's all about that resistance level. So looking at things, maybe the 4-hour perspective, this is a very important support level for me, because if we lose that 4-hour higher low, all progress of this bounce attempt will be lost, and we'll be looking back down at our fear low. So all about that resistance zone. If we do not break that resistance zone, bulls are not going anywhere. The financial sector and the healthcare sector look better than the NASDAQ. There's no doubt about that. But we know the S&P 500 will not go far if tech and the NASDAQ are not coming along for the ride. SMH, so daily higher low set yet again. That's now a little higher low, higher low, higher low. But again, we're getting hit after hours. We closed in the 228s. We're down 1%. We dropped a lot more than 1%, a good bit more than 1%. Again, bouncing a bit. I suppose we should look at NVDA's reaction. So NVDA found a bottom right when a news headline flashed across my screen that there was buybacks coming. That's when the bounce started. But it's still a bearish reaction no matter how you cut it. Low, high of the bounce. What we care about is the daily lows, 155, 157s, and we're right there right now. So it depends on where we open tomorrow. It is still a potential falling wedge. The bulls need to ensure that any bear breaks lack follow through to keep it a potential falling wedge. And this is a downtrending resistance line I'm going to be watching at this point. And that support line tomorrow will be all the way down to the 152, 153 range. So again, just a visual guide. I personally don't have any interest in playing off of this. And you look back here and say, what about all that price action? I'm more interested in the last month of trading as far as the resistance line is concerned, and it's nice and tight. And if I were to draw it, including that previous price action, it would be a lot steeper, and we'd be missing a whole lot of these lower highs. So again, just a personal visual guide. Once you get confidence as a trader, when you're starting out technical analysis, you always want, am I doing this right? Is this the right way? And that's obviously the right approach. You want to be asking those with more experience to make sure you have the concepts down and all that. But then once you get to year 4, 5, 6, 7, and you get that confidence, you get a lot more freedom. The trend line is going to go where I want to put it. And I don't need to ask anybody else if that's where it goes. If that's where it goes for me. And that's freeing in terms of having a lot more. Same thing as what I just talked about with SPY. Is that a daily uptrend or not? Well, that's up to you as the trader. You get to decide that in terms of whether you're going to consider it an uptrend or not. So certainly makes sense early on as a trader to not have your own opinions like that. But once you get that experience and confidence and consistency, you do get to have your own opinions and say, well, this is what it is for me. And that's perfectly acceptable. Except for price levels. Those are concrete. 183.71 is the daily lower high. Tesla saw a bounce today, breaking the stair-step pattern of a lower high every day. And we saw QQQ leading the bounce today. Again, we've been talking about this chart forever. So QQQ divided by SPY, green. So that was notable. And when that has been happening, it's the weaker names that start to see some leading action. And Tesla divided by QQQ did it as well. Again, one day doesn't mean anything, but certainly helped the bulls today. Are we in an hourly uptrend? I would say no. I would say nice hourly falling wedge. Did we draw that yesterday? I think so. Yeah, I took off extended hours. I talked about that a little bit. Sometimes I forget what I say in videos, what I say in live streams, what I say in the chat rooms. So 1 hour falling wedge broke bull. We don't have a clear hourly uptrend as far as I'm concerned. We did see a couple little pullbacks here, but daily time frame, we know we're just scouting a lower high. Again, we can bounce 15% from here and just be scouting a daily lower high. Daily EMA 12 resistance will be on watch. So it's just a question of how much bounce can we see. We're down a bit after hours, not significantly. So daily bounce is underway for Tesla. And a loss of the hourly higher lows will be an indication that the daily lower high is being set. I'm also interested in NIO because NIO, we know the most likely scenario is a daily higher low here. After the size of this bounce, lower wick today on the candle, trying to shape up an hourly trend change for the bulls. Really nice tightening range here. This is a 30-minute time frame. And you can see we set a very wide range in the first 30 minutes. And then we just traded within that range all day. But if we can see a new high of, we can see the high of today break tomorrow at $15. It's an hourly uptrend for the bulls, and our daily higher low will be set. So an aggressive bull is looking for an NIO entry and trying to play off of a support level. And right now, 1409 is a key support level. And this is the kind of setup where if I'm looking for that daily higher low and I'm making an entry before a bull break takes place, so I have better risk reward with my stop level of 1409 closer nearby, I make the assumption this is either the daily higher low or I'm wrong and I will stop out. And I can look for an entry even before it's confirmed that that's the daily higher low. Because again, if I wait for the break of 15, my stop loss is now $1 away, which is a long ways away. Whereas if I didn't wait, maybe my stop loss is only 50, 60 cents away, which is a much different scenario. So I don't have any position, but I'm keeping an eye out for NIO to be one of my potential bull plays. If the broader market bounce can convince me that it's going to be looking for follow through, NIO is a name I'm looking for a bull position on with a daily higher low, and Netflix is the other one. Netflix bulls showed up in a big way today. It was one of my highlights this morning live stream because of this base of support on the daily and just holding this level 175.71. So 1, 2, 3 holds. Again, while QQQ has dropped to a lower low, SPY has dropped to a lower low. Not only is Netflix not dropping to a lower low, it's holding its higher low, which is 5% plus above its fear low. So Long story short, Netflix is a lot more developed with its daily trend change attempt than many other names, and it is positioned well. If the broader market gets a bounce going, we're going to look for Netflix to try and break 196 to confirm the daily uptrend and confirm this weekly bounce sees some follow through. And if we look at Netflix divided by QQQ, it's been notably bullish the last 2 weeks. It's trying to confirm an uptrend as well. It's on the verge of doing so. Financial sector, double top at 20, make that 34.24, has broken. We're in a daily uptrend. The weekly bounce is clearly underway. We know we're scouting a weekly lower high, but the question now is, how long can bulls maintain the daily higher lows? Last one is 33.22. And it clearly our lead bull, a lead bull sector, on the bounce that is. We know names like the energy sector, utility sector, overall are stronger than the financial sector, but as far as names that were real weak and are trying to bounce, XLF and XLV are leading the way. So XLV, highest level that we've seen in 3 weeks. Next resistance, 133.25. Weekly bounce underway. Scouting a weekly lower high. A lot of space for it to form. But the question now is, how long can bulls maintain the little daily higher lows to keep this bounce going? IWM, solid day for the bulls. Nice recovery. We dropped after hours, but not much. We're break even with where we closed essentially. So daily time frame, we've got a little hold of support. We broke short-term resistance. It's all about 182.84. You break that level, it's a clear uptrend. The weekly bounce clearly is underway. That is the key level that bulls have to prove it to us. GME, big breakout day today. We know when GME gets cooking, that's usually when the market goes back to a bit of a risk-on environment. And we can see the last time we did that was mid-March to the end of March. And we know the last time we had any meaningful bounce was right then. So is GME trying to tell us something, that a broader market bounce is going to get going? It's only one day, but it is certainly a convincing day. And again, worth keeping an eye on just because of how clearly that move in March marked the pretty strong broader market bounce. Biotech sector. So we broke support. We're in an hourly downtrend. We're watching for a trend change back to the bulls on the hourly, but it's definitely a big step back. The double top daily rejection and then break of short-term support to give us the lowest level in over a week. The fear low of 61.78 is still a very important level. If we condense it to the 2-day time frame, we can see it's not game over for the bulls. It's just a notable setback. And so we need an hourly trend change to the bulls, and then it will be all about the double top at 71.57 with the burden on bulls. The dollar falling wedge that we were looking at yesterday broke bull, solid follow through. It's now going to be up to the bulls to confirm a 4-hour trend change if we're going to see daily bounce follow through. Top of the bounce, trying for the higher low, have to break resistance. If we do, pretty much if we don't, it's a daily bear flag. If we do, the probability of a daily bear flag will decrease a good bit, and we'll still be scouting that daily lower high, but the daily bounce will get some follow through. So 4-hour for clarity now. And again, it's just one time frame at a time. Hourly had clarity yesterday. Break that pattern, all right? No longer interested in the hourly. We did have a nice stair-step pattern that marked the top. Higher low every single hourly candle for 12 in a row. That marked the top. But now it's the 4-hour where there is the clarity. At least for me. It's different for other traders. With that, gold pulled back, lost the 4-hour uptrend, daily consolidation underway. Not surprising. Anything above 1807 is a daily higher low. Is this going to be a little daily bull flag, a very brief consolidation? In my opinion, that depends on whether or not the dollar is going to confirm a 4-hour uptrend or not. If it can't, then this is likely a little daily bull flag. If it can, then we're likely to see further daily consolidation. Silver is still holding on really well. Watching this rising wedge that I drew yesterday, technically we broke below it, and now we're back testing that resistance. And at this point, I'm just ignoring those lines and viewing it as a potential head and shoulders. So do we go from a 4-hour uptrend to a lower high and lower low? It's the exact inverse of the dollar right now. If the dollar confirms a 4-hour uptrend, we'll look for silver to confirm the 4-hour downtrend. So keep it simple. The most important support short term, 21.74. If that breaks, daily consolidation underway. You can see we're just sideways the last 3 days. Miners, sideways as well. Potentially topping out on the bounce, but decent close. Oil, volatility is incoming. Didn't happen with the inventory report today, but we're in a tightening range over the last week plus, and we know a break is coming. The two levels I care about short term are 108.61 and 111.96. If we break bull, we look at 113.20. If we break bear, we look at 103.24. So getting nice and tight. Natural gas bulls saw follow through today. Big upper wick, but still a 4-hour uptrend. We had a little 4-hour tightening range that confirmed that bull flag. So we know bulls keep control as long as the 4-hour uptrend remains intact. And very impressive dip buying. We've seen a 20% bounce straight to a higher high, a 28% bounce, not straight to a higher high, but certainly didn't take long. So certainly massive volatility, but dip buying still going on here. Big upper wick. We'll be watching for a daily higher low next consolidation. Trade review snap. I did not look at the snap chart once today. And this again goes back to trading as a team game, where in the chat room, AQ, remember AQ posted in the short room, top fishing, or he just said short snap off of 1457. So I certainly don't just run willy-nilly and jump into trades following people. But I said, oh, okay, I haven't looked at the snap chart. What's going on there? And as soon as I pull it up, it is glaringly a great short. Why is it a great short? We got the high of yesterday at 1457. We've got the high. Come on, 1457. Well, you get the idea. 1457. At that point in time, we had already rejected from that level. And so I'm looking at it, and I pull up the 2-minute time frame and say, oh, wow, that is a double top. And not only that, the short-term RSI levels are really overextended heading into that resistance. If I am top fishing or bottom fishing, I want the short-term action to be as extended as possible. The 5-minute RSI was over 80. The 15-minute RSI was over 80. That's extended, especially coming from a massive dump. So we're bearish on every single time frame. We've made a very significant bull move in the short term to get right up to resistance. And again, it's just a visualization. It's a bull running, and he's just exhausted. By the time he gets to resistance, he's used up all his buying power and all of his energy. And so I missed the initial move, but I looked for the 2-minute lower high. I saw this pullback, and within a span of less than 4 minutes of reading his post, I then had a short. And it was looking for, okay, that's a big enough pullback from a very key resistance level that I am going to scout a 2-minute lower high entry. So I entered, had one entry at 1445, I believe. I posted this on Twitter with the details, but 1445. And then I thought, okay, this is really clear. I'm gonna go aggressive. And I doubled down and I increased my position at 1441. I doubled my position. And then a short-term bear break took place. And I said, okay, I'm going to take off half of that real quick to go from very aggressive back to just a normal size position. And it's also the fact I don't think I've ever traded snap in my life. So that's another reason that I'll have a smaller position. If it's something that I trade very often and I'm very comfortable with, I'll use larger dollar size, but took the aggressive position off fairly quickly in the 1430s. My break even at that point then goes up to 1450s. So extremely low risk. And I exited the rest of that position when 1411 support held. And this is an example of over trading in the sense that I'm reacting to levels on too short of a time frame. And so my intention was go back to all cash and then scout the 5-minute lower high with the same mindset. Okay, this is a big enough pullback that I'm definitely scouting a 5-minute lower high to be the result of the next bounce. And I was well aware this is a head and shoulders. I'm posting 5-minute possible head and shoulders. And by the time the time came for a re-entry for the 5-minute lower high. I just had missed it. I was talking in the chat room and doing all this other stuff, a bit distracted. And so I missed this leg down, which would have been a really nice one. It would have essentially doubled my gains on the trade. But I recognized, I missed that snap move. I shorted QQQ at that same point in time. And I forget where it was. I think it was right around here. Just getting this 5-minute lower high. So I was able to get some profit on a QQQ short after fumbling my reload. So obviously in hindsight, just holding on to my half position into hourly consolidation would have been best. Too zoomed in. If I had re-entered, it would have been perfect, but not the way it went. Either way, solid win. Teamwork. Other eyes on a chart for me to allow me to just really quickly, bing, bang, boom, catch up with things without watching it at all on the morning. Appreciate you watching. Do good things. Hope you had a great day. And doing that private live stream tomorrow. Hope to see you there.